The Australian unemployment rate is at its highest level in a decade, as the country's employment statistics continue to fall short of forecasts. Hi there, I'm Ben Jones, and joining me on the line to discuss these statistics is Sian Fenner from Oxford Economics. Firstly, Sian, if we can begin by looking at the unemployment rate, it's gone from 5.8% to 6%. Is this what you expected? And why is Australia one of the only developed economies who's seeing its unemployment rate continually rise?
Well, the unemployment rate has actually been trending up over the past year, and we did expect a modest increase in the January figures. Although at 6%, it's a bit higher than the general forecast, and it now stands above its peak in 2009. Actually, if we take into consideration the participation rate, which has been trending down, it would actually mean that the unemployment rate would have been well above 6% before this January figure came out. As you mentioned, this is in contrast to other developed economies. I think a key difference is that the Australian economy is not moving through a period of recovery, which is supporting stronger employment growth. In contrast, the Australian economy is actually facing the challenges from the end of the mining investment boom. This means that it's transitioning through a period of sub-trend economic growth and consequently weak employment. And to date, other non-mining sectors are failing to fill this hole. As such, we actually expect the unemployment rate will continue to hover around these current levels for at least the first half of this year before drifting down, and when it does, it'll only be gradually.
Now, employment change has also been disappointing, minus 3.7k, where many were predicting a 15k rise. How damaging are these figures to Australia, and does this solidify the current interest rate for a while?
So today's employment data statistics were indeed disappointing, and compounding this, though, was also another fall in the full-time employment. Full-time employment has now fallen 12 out of the last 15 months and is currently at its lowest level since January 2012. Now, a key impact of the soft labour market is what it means for household spending. To date, households appear to have really shrugged off the deterioration in labour market conditions. Retail sales have made solid gains. However, job insecurity coupled with really subdued wages growth is expected to start dampening household spending going forward. And actually, even yesterday's consumer confirmed this, with sentiment falling to its lowest level since May last year. In terms of what this means for the interest rate, well, we don't think that today's disappointing job figures will change the near-term picture for monetary policy. The continued softness in labour market conditions and a gradual trending up in the unemployment rate won't come as a surprise to the RBA. And indeed, looking further ahead, we actually expect, despite today's figures, we're expecting the RBA to start normalising interest rates at the end of 2014. That said, clearly with sort of sub-trend GDP growth forecasts, we're expecting the tightening cycle to be very gradual and interest rates to remain still very expansionary.
And finally, in your opinion, what can be done to ensure that figures don't continue to rise in the future? How can employment statistics be improved in Australia?
In the near term, what we need is, at the moment we've got federal and state governments there aiming to reduce headcount as part of sort of some fiscal austerity measures. What we really need is sort of household and the non-mining sectors to start doing some more heavy lifting. For that to occur, we need both households and the other sectors to really move away from this sort of cautionary behaviour that we've been experiencing. Households in particular have been, since the financial crisis, have been reluctant to spend. And what we need is for them to start stimulating the economy by more. But we are looking forward. We're not expecting the unemployment rate to suddenly drift back down to 5%. It's going to take a while for labour market conditions to improve.
Sian, thank you very much for talking to us today. That is all from me, but stay tuned as we have plenty more exclusive interviews for you throughout the day. Thanks for watching. Goodbye.